Welcome back. I'm Rachel Roller. Let's take a quick look at today's business headlines. And for some extra help in doing so, let's add a businesswoman to the mix, shall we? For our money team this Tuesday, Executive Vice President at the Commonwealth Foundation, Jennifer Stefano. Also, we have business and market analyst and Newsmax contributor Seth Denson and America's accountant Dan Geltrude. So good morning to you all. Let's get straight to the markets. Let's take a look at this. The Dow Jones stumbling slightly at the end of trading yesterday, losing nearly 13 points, but staying above that 36,000 mark. Futures are up ahead of trading. Jennifer, I'll start with you. The Dow has seen its ups and downs over the past couple weeks, of course, but how do you see this playing out through the end of the year?
Well, look, as inflation continues to increase, I see big problems heading in, certainly to the first quarter of the new year. You know, value stocks tend to do well in high inflation, but frankly, when you're looking at the baby boomers and the continuing retirements and how many people rely on income and dividends from the stocks, I think you're going to look at real problems in the market, particularly for retirees.
We're also having some problems with our business headlines, so take a look at those. Mark Zuckerberg can't seem to get out of the hot seat. The Ohio Attorney General now suing Meta Platforms, of course formerly known as Facebook, for allegedly misleading the public about how it controls its algorithm, and then, of course, all the effects that it has on kids. So, Seth, do you think Meta can recover from the bad publicity? Do you think, in fact, that name change was to make this all just disappear and it didn't quite work?
I don't know if it was make it disappear, but it was certainly to change the trajectory of how people look at Facebook overall. Listen, Facebook's year-to-date stocks are up over 30%, and since their initial IPO in 2012, they're up over 800%. The biggest, we'll say, concern for Zuckerberg and Meta shouldn't be whatever might happen in Ohio. They still have 3 billion users. Their biggest concern is how to stay innovative, because there's a lot of competition in the space. They haven't bought it all up yet, so that's going to be their biggest challenge.
All right, well, we're seeing a lot of inflation, but we're seeing also it might not be so bad for everyone. Tyson Foods seeing a 3.5% jump in sales after abruptly raising prices on beef, chicken, and pork. So meat packers are dealing with high demand and a shortage of plant workers. So, Dan, they raised the prices, but people still want their products.
Yes, they do. And I'm actually not surprised by this, because when you think about people having that feeling of scarcity, which creates a certain level of panic. So people are saying, well, wait a minute, I'm not going to be able to get my chicken. So every time it's available, let's make sure we buy it up. So basically, Tyson, all the products that they're generating and putting out on the shelves in grocery stores, it's getting bought up, which, of course, at higher prices is going to lead to higher revenues for Tyson.
Of course, we all remember the scarcity panic over toilet paper. So maybe it's that with chicken nuggets. Who knew? Let's talk about supply and demand a little bit, though. Reese's Peanut Butter Cup growing up big time, instantly selling out of this. It's a ginormous Thanksgiving pie, 3.5 pounds of pure joy. There was only 3,000 of them, though. People are already getting on a wait list. So what do we think here? Do we think this is pure gold? Do we think that maybe they should sell more?
Listen, they're on a wait list. They need to call America's accountant, because he bought all 3,000 of these things because that's his favorite candy, just in bigger form. So you need this. If you want this pie, call Dan Geltrude.
Is that the secret?
He's exactly right. He's exactly right, because that is something, when I heard about this, my eyes popped out of my head, and I said, I got to have this. And let me also make reference back to Seth's favorite candy, which is candy corn. Makes no sense. I don't know if
they never run out of it. They never run out of it.
Okay, Rob Finnerty's a candy corn guy. I can't even go there because my brain can't comprehend. Jennifer, you?
Candy corn, and of course, it's binge eating to make yourself feel confident with the terribly high inflation that our current administration in the White House isn't handling. Yeah, I'm going to need a big 3,000 couple of Hershey pies and Reese's pies. Let's go. Let's get them in.
I mean, I usually resort to Reese's Cup for anything going on in my life, so I'm with you there. Let's take a look, though, what's happening at Home Depot. It seems people have extra time on their hands. Something we've seen, really, for the last 18 months as more people were at home trying to fix up their home. Home Depot now topping Wall Street's estimates for its third quarter earnings, fueled by a nearly 10% jump in sales. Jennifer, do you see this lasting long term, or do you think they're kind of just honing in on the moment that they have right now?
No, I mean, I think it's due to inflation and the increase in the consumer price index, and housing is leading that. It's just too expensive to buy a new home. So I think what you're going to see is people fixing up their houses, people putting on what they can. I think you're going to see the same thing with cars. They're going to run their cars out as long as they can. You're going to see places like Pep Boys and other companies doing well during times like this. I think there's just no room for people to move to go to a new house or a new car. It's really killing that market, but helping places like Home Depot.
Moving during a pandemic is always a nightmare as well. Let's take a look at what Green Bay Packers are doing. They're selling $90 million of stock to help fund improvements for Lambeau Field. Just the sixth time in their storied history, shares have been offered to the public. This, of course, all coming after quarterback Aaron Rodgers returned from COVID list to lead that game to victory. Seth, what do you think's happening here?
Well, listen, I think this is probably a good move. The Green Bay Packers can't buy another Super Bowl. They still have one more to grab before they're even close to my Dallas Cowboys. Don't tell Finnerty to talk to me about the Patriots. But listen, $300 per share is what you can buy a Green Bay Packers share for. If you can get your hands on it, might not be a bad buy.
Dan, you buying Packers?
I am not, because I'm not a Packers fan.
Just buying Reese's Cups.
And number two, this isn't a good investment. They're telling you don't buy this if you're looking to make a profit or get dividends. It doesn't appreciate. What's the point other than you have pride in your football team?
Jennifer, I see you shaking your head. Final thought?
Yeah, look, I'm offended by both the positive references to the Dallas Cowboys and the negative references to candy corns. But no, I would not buy stock in any NFL team. I don't like what they've pulled. I don't want to help them out. And overall, yeah, generally the free market at work, but don't buy something they tell you is not going to have an ROI, a return on investment. That's generally a bad idea.
There's really so much we could continue to discuss, but that's all the time we have this morning. Jennifer Stefano, Seth Denson, and Dan Geltrude, thank you so much for joining us.